All right, hello, hello. It is November 19th. What do we got? Wednesday. I didn't take any trades today. I haven't traded since like Wednesday or Thursday last week, so it's been a little bit. But I wanted to make this recap anyways, even though I didn't take any trades today. I want to walk through the entire day. So, obviously, when I go back and watch these, I can understand what I did right, what I did wrong, what opportunities I missed, what opportunities I faded, which was a good thing. So, lots of learning lessons today, even though there was no trades. So, I think it's still important for me to walk through the entire day. The more I'm able to walk myself through these days post trading, the more I'll be able to recognize the patterns and do them well in the trading day. So, starting off, it was a crazy day. Lots happened, a couple opportunities, a lot of opportunities that weren't presented. So, we'll kind of just start from the very beginning and go throughout the entire session. Starting out, we didn't have an opportunity. We almost had an opportunity for longs here. A couple reasons why we didn't. So, market opened. We draw down, make relative equal lows with these down here. Actually, it's 4 on the 1 minute. It's like quad relative equal lows. One, two, three, four. We make a fourth relative equal low inside, again, CE of this 15-minute gap. And we want to see it push past this level, right? We don't want to see it make relative equal lows and then just go higher from there. You want to see some sort of liquidity sweep. Like maybe we can, what would have been nice, like would have been a good entry opportunity is if we see price, instead of coming down into this 15-minute gap and making relative equal lows, instead if we saw it come down, sweep out London low, then go higher, that would have been an opportunity for us. But that didn't happen. We left relative equal lows. It's hard to get in a long position when you have relative equal lows just sitting here. And also, all of this happened within the first 15 minutes, and that's our rules that we don't trade within the first 15 minutes. So, because of all of that, it's why we couldn't enter off this initial long. It didn't sweep any liquidity. We left behind these relative equal lows, and it was within our 15 minutes, the first 15 minutes. So, we couldn't enter off of that. So, what are we thinking about after, since we don't get that entry? We're looking for some sort of retrace and re-enter for continuation model to go higher. Maybe it's a 5 minute, maybe it's a 15 minute. 15 minute, we'll look at that and how this doesn't make sense. So then we'll zoom into the 5 minute and how that almost makes sense. 15 minute, first presented 15 minute of the session. We don't get that confirmed until this candle at 6:45 closes all the way up here past the New York PM high, New York AM high, London high. After we sweep all of this liquidity, this 15-minute first presented finally gets confirmed. So that it was too late to trade the 15. So what you could do is trade a 5 minute continuation, which was looking really good. Here, this should be just a 15-minute inverse. Let me change this real quick. I don't know why I have this up on the lower time frames. I'll get rid of all this. Okay, that should be good now. This will make it a little more clear. So instead of taking a 15-minute first presented continuation model higher, we could look at a 5 minute. And again, this is all still in play with the fear of those relative equal lows being left and not sweeping liquidity. So again, this is all just kind of going for it, but we don't even get an entry opportunity. So looking at it, right, we get, this is technically right here is our first 5 minute gap, but again, that doesn't get confirmed until we're all the way up here. And so to see price go from here all the way down here, then back up, who knows if that happens. So this 5 minute gap there, we get this 5 minute gap here, and again, this gets confirmed when price is up here. And so what we would want to see is this 5 minute gap after it closes up here draw back down into the 5-minute and give us an entry for longs. Because at this point, right, this green candle isn't here. So that liquidity up there is still valid, still open when we close right there. So we'd want to see a retrace up into these levels of liquidity. That could have been an entry for continuation longs. We don't get a pullback, so we don't have that opportunity. And then little do we know, this liquidity gets swept here, here, here. And so we're kind of just out of the market at this point. We're like, well, we don't really have anything to look at. And this is where the opportunity for shorts come into play. So that was that first long example that we missed. There was no inverse fair value gap model towards the beginning. There was no continuation model to catch that leg up. So we have to see what happens around this Asia high. We do get an SMT. I have it drawn differently. I have it drawn as if it's not an SMT. Maybe they want a body candle closure above that Asia high or above the Asia high to negate it. Because we get closure above it on NQ. ES we didn't. So we have an SMT at Asia high. Looking back on it, this seems like it's actually a good setup. The reason why PJ doesn't like it is because at market open, we move up 350 to 400 points. So the idea that we're just gonna now instantly reverse the same amount of points is kind of crazy, although that's what happens. It feels low probability to take a complete inverse at this high and take a short rather than just waiting for a retrace and then to continue trend and go higher. Inverse is what ends up going through here, and I'm seeing why this is happening. So one SMT at a drawn liquidity, great. Also, we're delivering out of a 1 hour gap and a 4 hour gap in this area around this Asia high. So SMT on at this Asia high and delivering out, that would be delivering out of this 4 hour gap, out of this 1 hour gap. It's looking real, like looking at it now, this setup is super clean for an inverse because we sweep liquidity on one index. We get a SMT surrounding that liquidity level. We also are delivering out of high time frame PD arrays on this 1 hour and 4 hour. And this is how you know it's good, because PJ looked at it after his indicator printed this setup. I'll go to the 1 minute and we'll see what the trade idea would look like. You basically take this 1 minute inverse of this gap right here. We'll zoom in a little more. You take the 1 minute inverse. When this candle goes inverse, you go short right here, stops above this swing high at like 44 points or so, and then you target lower. Where you target, you actually target, so we have a 50-minute gap right here. What you would target is CE of that 15-minute gap. Even just top of the gap is a 1.4 R. So I don't see why this trade idea is a bad idea. The only reason I can think of that's a bad idea is because we moved so bullish off the open. 350 points off the open, you would think it would just continue higher. It's not what happened today. Like I said, I'm pretty sure it's because of... I'm just going to go through it again because I think this is so clear. I need to hammer this down and understand the probabilities here. Because we sweep liquidity, we have an SMT surrounding that sweep of liquidity. We're delivering out of high time frame PD arrays, like a 1 hour gap and a 4 hour gap. That screams inverse fair value gap setup. The only reason why we don't take it is honestly because of the big move off the open. So realistically, I mean, if PJ is staying out of this trade, it's probably best just to continue to stay out of it. Although what's weird, obviously, like I said, his indicator printed that setup. So in it, literally, you could have held this trade all the way from your entry. Let's say it's roughly around here, all the way to these relative equal lows that we were talking about earlier. That's a damn near 400-point trade. That's insane. So that's something I'm going to be looking at it in the future. Is whenever we have that setup, sweep, SMT, delivering out of high time frame PD arrays, in a clean inversion setup on the lower time frames, I take a shot at it. At least take a shot, right? Because if you're wrong, maybe let's just say you go half risk. Let's say you're wrong, right? You go here, 44 points. If you're wrong, minus 44 points versus what could have been a almost 400-point trade. That's a 1 to 8.5 R. I think you take a stab at that all day. I really think you do. I think that's something you take a stab at. I don't think we should have faded this looking at it. The risk to reward, we're in such a discount for this short. You're top ticking it. I think the opportunity is there, so you take it even if you lose the trade. So one thing I do regret from today is not taking this trade. And so that's my thought. Obviously, first trade, I'm fine missing that. Second, I would like to be in that. Even though I get the whole first 300, 400-point move, rebalancing, then going higher. I get that. So that takes down the probability, but I think you take a stab at it. That's just my thought, my intuition. So we miss that. We still have draws lower. And so this mid area, I'll go over this real quick. This mid area, we're trying to find a setup in here. It's just nothing's showing up. It's in coin flip area, right? Because we inverse this 15-minute, but we have the 15 first presented, 15-minute first presented gap that we'd be trading into. We even get it. We get the inverse on this candle, and then we tap back into it, and then we go lower. But you're trading into this 15-minute gap first presented, so it's like this is the coin flip area. This is the coin flip area where you should not be entering. At this point in this area, it feels like you're in coin flip and you're just trying to force a trade. That's what I was noticing. Later in the session, around this like 9 a.m., late 8 o'clock session, or part of the session in this area, I always feel like I'm trying to just force something if I hadn't been taking a trade at that point. And so I'm deep into the 1 minute time frame, deep into it in this area here, trying to find a continuation model lower. But I just can't help but think that there's something on the 5 minute, on the 15-minute, on the hour that's lowering my probability that I'm just missing. And so at that point, you just want to stay out here, because likely there's something you're missing. And it's just lower probability. You're in the sandwiched in the middle. It's just a coin flip area. So realistically, that was the day, honestly. This first trade idea, I don't mind missing, so we don't sweep liquidity. There's not a clear inverse fair value gap set up here, and it's within that first 15 minutes. So I'm cool staying out of that. What does hurt a little bit is missing out on this Asia high sweep in inverse fair value gap to the downside. Even if you just target CE of this 15-minute presented gap, even that's 130 point something trade. Yeah, 135. So it's even that is like, that's something I want to take a stab at in the future. I think looking at it now, that's something I'll probably take a stab at in the future, even if it's half risk. It's there. So, anyways, that was the day today. Exhausting day, roller coaster day. But cash is a position, so that's why I record these videos, so that I can look back on these days and see what I did right, what I did wrong, what I missed, what was me just like being hopeful that happens. It's so much that goes into these days where there's no trade. So it's still important to recap the days that you don't trade and understand what happened on the day. So, anyways, look to take this a shot at this trade in the future, but that's something we'll just have to recognize with time. So, anyways, that'll be it. See ya.